with Peter Andersen with us here. This bull market, what is the character of it, Peter?
Well, I've struggled through this so-called bull market from the beginning of this year. We have high conviction in the stocks we own, and it really has tested our conviction because there have been moments of severe volatility with no basics for some of the reasons these stocks fall. So let me give you an example. Palo Alto Networks, it's up about, 100% now? But if you checked in on that in the first quarter, you would be very depressed to see that return because it was not there at all. So a lot of things are changing, and in our opinion, for no apparent reason. It's just very headline driven right now.
You were physics at Northeastern, along with a lot of other academic abilities as well. And you did a new derivation of Black-Scholes. Myron Scholl's been a good friend of the show. Is the mathiness of Black-Scholes working in this era?
Well, I'm glad you brought that up because I am a nerd at heart. That took me a long time on my spare time to derive that, and sometime we can talk about that. But it's always arguable that what came first, the price of the options and then the Black-Scholes equation was created to explain that. And one interesting thing is people should go back before the Black-Scholes and see the history of option prices and then fit it into Black-Scholes and see if it actually works. My guess is people would probably be disappointed. And one last thing. People now, traders in the options world, they use Black-Scholes to tell them the price. So it's a little bit backward because Black-Scholes explains what's going on, but we shouldn't use it as the God reference that this is where the price should be, if that makes sense.
Peter, you're talking about the markets moving and tough to really get a feel for it sometimes, given all the headlines. Talk to us about the AI trade. How do you view kind of the best way to play AI these days?
Well, I have to admit to everybody, I was on the wrong track when AI first started hitting the headlines. I was so fixated on the idea that people were afraid it was going to take over the human race, it was going to replicate the human brain. And I drilled down into that area, and I came out on the other side thinking, no, this is not ever going to replace the human brain because we don't know how the human brain works. So if we don't know how the human brain works, how can we build something that mimics it? So I've gone beyond that. That's kind of a sideline now. People are not as much alarmed about that. And I'm thinking of AI more as like a very versatile mule that will do a lot of advanced computing. I wish the name AI wasn't affiliated with this technology because I think it derives a lot of confusion and fear in people. Instead, if we called it advanced computing or something like that, I think it's far more relevant. So to answer your question, right now, I think AI will continue on its path. People are worried that it's going to be like the fiber optic debacle or the dot-com bubble. I don't think that at all. I think our demand for computing power is frankly infinite. The more we supply, we are curious humans. We always have questions. I can't imagine any scientist, for instance, saying, okay, we've got enough compute power and I've answered all my questions. And I think one of the best way to play that is with the infrastructure builders, the ones that are actually building the data centers.
What is quantum computing, and how does it relate to AI, if at all?
Yeah. So quantum computing, I feel sorry for most of us trying to understand it. I would say of all the sectors that are out there right now, it is the most difficult to truly understand as a stock analyst, for instance. So at some point, if you're not a physics background like me, you have to say, I'm just going to accept that I will not really understand the nuts and bolts of that technology. But I will tell you this, it's not going to replace our laptops. It has a very specific function to solve problems that are highly complicated, but simple to ask. And scientists will use it, material scientists will use it, chemists will use it, but in terms of us, it's not going to apply to our PowerPoint or email. And I think that's one of the main confusions. People are thinking, where does this fit in, and how would I use it?
Peter, you and I have the humility of what happened to Wang, what happened to DEC. Your thoughts on Microsoft here, given the AI revolution?
Yeah, Microsoft is interesting because it has chosen to participate in this, and I'm not certain that it would be my choice. For instance, full disclosure, we do not own Microsoft. I never have. And I think there are probably better ways to play if you're totally interested in AI, for instance, than that. I will tell you this, in 2015, we were one of the original discoverers, frankly, of NVDA stock, and I owned that for a long, long time. I sold it about a year and a half ago, but that was a case where, you know, the so-called picks and shovels argument really is valid. And I think as the AI industry matures, you know, there are probably more ways of playing this. So rather than just going with the manufacturers of the chips, maybe you go with an integrator of all those components, which is where we're focused on right now.
Peter, what do you make of an IPO like SpaceX? I mean, it jumps off the page, if for no other reason than its absolute size. But the value that's being ascribed to Elon Musk, when you look at the valuation of this company, what do you make of that?
Well, full disclosure, we do run a long-short strategy, and I am short SpaceX, long-dated puts, okay? So that should give you a quick answer. But the rationale behind that is the valuation, in our opinion, was insane. You know, on a price-to-sales basis, it was just a crazy, illogical valuation. I was surprised. Let me give you some example. We manage money for some private clients. Some of the most conservative private clients that you would have had to ask, you know, to buy an S&P 500 index were calling us, asking us if we wanted to invest, if we could invest in the IPO. That stunned me because I can't think of a more risky sector than rockets taking off on a rocket pad, on a launching pad, and blowing up, et cetera. I mean, it's a very attractive, seductive industry, and I think a lot of retail investors have gotten seduced by that. But when you look at the cold numbers, I just don't think it's there on a price-to-sales basis, and it has to have so many successful launches. We know from physics, frankly, that, you know, this is a high-risk industry. So we have obviously taken a negative view on that and continue to have that view.
You know, we had George Noble in the other day, which was just a joy, of course, definitive Fidelity Overseas Fund. Peter Andersen, I'm wandering through Justin Bear's magnificent House of Fidelity, and it's like a time warp, you know, back ages here, really back, you know, a century, if you will, in Boston. And I look at all this, and the heart of the matter is a cost revolution from mutual funds to ETFs. Where are we in 5 years with ETFs?
The ETF industry has exploded, I think, beyond anybody's imagination or extrapolation as to how this would go. And, you know, now we're seeing, which is, again, in terms of investor risk, you see these ETFs that have a single stock in the ETF and are levered, double or triple levered. So that gives you a sense of how the envelope is getting pushed to the extreme. A lot of people don't understand how these leverage ETFs work. You know, it's very tricky. You can't just hold on to them. They're more made, ideally, frankly, for a day trade, which is a whole other industry. So I think the separately managed account business, you know, which is different from the ETFs, I think that still has a lot of legs and support. And ETFs play an adjunct role, but I would not necessarily think that this industry is headed in a more conservative direction. It seems very aggressive, actually.
Paul, could you see Peter Andersen and Jim Caron in the same room?
Oh, yeah.
It'd be just too much physics. That's all there is to it. Peter Andersen, thank you so much. I'm glad to see you got through Sears and Zemansky 8 years ago with Andersen Capital Management, and we say good morning.